Here's what the backend flagged today. SPX printed a new all-time high, and VIX still closed up over 4% on the exact same session. That doesn't happen much, and the divergence has teeth. We're running the full system readout, and we're finishing on the #1 ranked ETF and stock from today's best of best scan. SPX closed up nearly 2% and printed a new all-time high, but the Nasdaq didn't confirm one. QQQ surged 3.4% and still couldn't clear its own prior peak, with its MACD still sitting in negative territory. The system's holding a question here. Is this breakout backed by real breadth, or is it a short squeeze running out of gas at major trendline resistance? Whatever the answer, it shows up first in the macro layer. DXY is holding under 100, while bonds caught a bid, the 30-year pulling back to 5.19% from last week's high near 5.28. The system flagged the bigger structural move. Treasury is pushing the Fed to upsize its existing dollar facility for foreign central banks, so Japan could borrow dollars to defend the yen instead of selling US Treasuries into the market. That's still a proposal, not a done deal, but it's a macro parameter that changes where international capital can flow without triggering a rate spike. And that geopolitical risk unwinding is exactly what drove the energy picture into reverse. Energy is giving back its leadership. Crude pulled toward $75, down more than 6%, as Hormuz reopening talks and Gaza ceasefire progress both hit the supply fear bid at once. That's a double unwind of the geopolitical premium, and XLE and the broader energy complex felt it. The risk premium bid that had been pushing this sector is unwinding fast. And that same easing risk story is exactly what lit up the metals picture. Metals caught the same risk-on bid. Gold added 2/3%, and silver ran 2.6, with record central bank buying still underpinning the precious side. But the standout was copper. COPX jumped nearly 6%, the biggest move anywhere in this complex. That's an industrial demand signal, not a fear trade. When copper leads gold on a risk-on day, the message is growth, not hedging. And that same growth read is exactly what shows up next in international markets. The international readout is leading. EEM is up over 20% year to date, and EWT has surged more than 60%, with AI semiconductor momentum in Taiwan and Korea driving the move. That Japan dollar facility the system flagged in the macro layer, if it gets upsized, it reads through right here. Yen stability without a treasury sell-off would keep capital deployed in Asian tech instead of rushing back to dollars. Taiwan Strait risk is still a check on how far that confirmation runs. And that gap between international strength and what's happening in crypto is exactly what makes the next section the contrast it is. Bitcoin's got a death cross on the daily. The 50-period moving average crossed below the 200, and compounding that, the 4-hour chart has its own bearish MA crossover stacking on top. The scan is tracking the range between 58,000 and 67,000 as the key confirmation window. The recent bounce towards 64,000 is running straight into the Ichimoku cloud and the broken trend line overhead. The MACD has rolled over too. And that contrast between crypto's breakdown structure and what's been holding up in the equity scan is exactly what the best of best sorted for. We opened on SPX hitting a new all-time high, while VIX was rising. That durability question is still on the table. The #1 ETF and stock from today's scan are still ahead. The best of best filtered down to 134 symbols today. The strength concentrated in a specific corner. Cybersecurity names are sitting at the top of the shortlist, even with the broader market sending mixed signals. Here's what the system surfaced. The sector ranking answers that breadth question from the indexes. Only financials are in a leading state. XLF is the #1 ranked sector. Healthcare and real estate land at 2 and 3, both in lagging states. When the only leading sector is financials while everything else is lagging, that's a narrow base for an all-time high. The top ETF the scan flagged this session is up next. CIBR, First Trust's NASDAQ Cybersecurity ETF, is the #1 ranked ETF on today's scan, closing up over 4% with a ready signal state. When CIBR leads, it's a theme read, not a single name reaction. It's the whole cybersecurity sector moving as a basket of the group's key names. That's a different kind of signal than one stock running on news. And the #1 stock from the scan sharpens exactly which name is out front in that theme. The #1 ranked stock is CRWD, CrowdStrike, the largest pure-play endpoint security name on the scan. It also closed up over 4% and came in at a watch signal state, different from CIBR's ready. And that distinction matters for how you read the setup. When CRWD leads and peers like PANW and FTNT move with it, you're looking at a sector rotation. When they don't, it's a single name reaction. The scan logged both. How they move together tomorrow is the tell. That VIX divergence the back-end flagged at the open? Here's the system's read. One sector, financials, is leading. Everything else is lagging. SPX is pressing into major trendline resistance. That's not a confirmed breakout. That's a short squeeze at a ceiling. The thing to watch tomorrow? Can the Nasdaq confirm the SPX move and close that divergence gap? Or does it fade and turn today's all-time high into a false one? Verify the CIBR and CRWD signal states live in SignalFinder Pro before drawing any conclusions. And remember, this is educational, not financial advice. Do your own homework.